Invest in yourself, and I think we talked about this. Your income will never outperform your personal development. So invest in yourself. I can say the reason I'm here at this point and all the opportunities been because attending these rooms has been very valuable. Making those partnerships and fostering those partnerships that investors and people you meet at these events is so valuable.
All right, welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Properties. Today we are with Domínguez, VP and co-founder of Sana Wealth, a BA in economics and real estate investment. He is an expert and has also $18 million worth of real estate in his portfolio. Al, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Yes, thank you, Josh, for having me and the invitation. Very excited to be here. So my name is Domínguez. Uh, I am a fund manager at Sana Wealth, and our goal is to help new investors are looking to invest in multifamily, and we have the opportunity for them in large assets that will hopefully leave a legacy for their kids, build generational wealth, and get some income along the way. A little bit about my background. So I'm originally from Puerto Rico, and I came here when I was 12, and I had to assimilate to the American way and the American way. And so I gone through all the cycles of of dealing with financial challenges and the difficulties that it is to make your way and impact in your journey in life. So I had to learn English. English was not my first language, so I had to learn it. And from there, I had to I attended college, and I really didn't know what I wanted to do, but economics and math was something that came easy to me. So I gravitated towards that, and I got a job at in Wall Street after I finished college, and I was a operation analyst for 8 years at JP Morgan, and from there, I felt like I needed to be more creative, and I wanted to be more creative and create an impact for the community. So I started to learn how to code. So I joined a school for software engineering, and I started as a freelance engineer. So my journey has been long and different aspects, but happy to be here. And now I'm in real estate, and I'm using it as a vehicle to build generational wealth and make a positive impact in the community.
That's an incredible story, and how you transpired to where you're at currently. So, what was the pivotal moment of getting into real estate? Tell us about what that was and then your first deal.
Yes, so interesting enough, it all started with listening to a podcast. 2 years ago, I listened to Bigger Pockets, and most investors listen to Bigger Pockets. So I listened to Bigger Pockets. On there, there was this operator talking about how they were buying large multifamily assets, and they were in real estate, and they were helping investors. They were um, building wealth through real estate. And at the end of the podcast, they give the contact info, and I'm a learner by nature, so I called him up. I was like, have a conversation, and it was an amazing conversation. It opened my eyes, and I asked him, how can I get into this? How can I do this? Right? And they gave me the steps, and I just started following their steps. So I started in single family doing assignments, and I did that for a while, and I learned to underwrite the single family properties, back with the brokers. So it was a learning experience, and I partnered up with another partner, and they were on the dispo side and I was on the acquisition side. So it gave me a lot of experience in the single family space. At the beginning of this year, I I started to realize I was putting a lot of effort and work into single family and reaching out to brokers, sourcing these deals. That I said, why not just put all that energy and effort into multifamily? And I had an opportunity with a high level operator, and we started a fund of funds, and that became a successful thing. We closed on a $30 million asset in Arizona. And from there, it's just been this learning journey for me. And now I'm part also of a GP that we're acquiring a boutique hotel in Puerto Rico, and it's under development. So, and that's another exciting opportunity that came from starting the fund of funds.
That's a huge transition. So that's you started out on assigning contracts, which is that's a whole world on its own and a whole. I mean, that's an art in itself. You're prospecting and finding people that want to sell their house. You get it under contract, and you essentially sell the paper to an end buyer, and that can be very grueling and very tough. And it can also deter a lot of people from real estate because it's transactional, and it's kind of like everything you've heard about real estate. That is kind of like the opposite, but it also gets you into the path of buy and hold, and then rentals. So that's a very cool story. Um, and then you met the. Tell us a little bit about how you transpired more into multifamily, and then ultimately what you had to do to go find an operator and find one that you wanted to partner up with, and then how you felt you could give them the skills that you've acquired to help the organization. Like, tell us about how all that transpired, please.
Sure. So um, I should say that before I started the fund of funds, I decided to invest as a limited partner in other operators deal. And so I took my time to, go to the Zooms that these operators were having, networking events that they were putting out there, just get to know the operator really good, see if the values and your vision match, and really ask the questions about, what's their business plan and how is my money or my investment going to be protected. So I invested in two opportunities and as a limited partner. And from there, I got to see kind of how does it look like to be an investor as LP, because I needed to understand that in order for me to then transfer that information to my potential investors in the future. So I think that was really really key for me, and I had the opportunity to do so. And I've learned a lot through their communication, newsletters, just investor calls, and the coaching that they also provided. It's been really helpful for me to learn the this asset class. So anyone starting out, I would say, if you feel like this is too much to start out in multifamily, try to invest and find a high level operator that you can collaborate, and maybe in exchange they can give you information and educate you. But you're investing and you're seeing the ins and out from another angle, which will help you to relate that to your future investors. So I did that first. As far as finding high level operator, it's kind of like when you start dating, right? You have to spend time with that person, and you have to see how they communicate, how they conduct their business. I tend to gravitate towards operators that are transparent, so they're giving you a lot of the information up front, and they're not holding back, right? So I was fortunate enough to be part of a Zoom call where this operator was presenting an opportunity to partner up with them, and I had basically hours to decide whether I wanted to do it or not. And a part of me, this mindset was like, no, you shouldn't do this. This is too hard. You've never done this, right? But then the other part is like, but if I don't take this opportunity, then how am I going to move to the next level? So luckily, um, two other investors that were on this call reached out to me and they're like, "You want to do this together?" And I was like, "Well, I'm not familiar with with the concept. I've never done this." Well, and they were like, "Well, let's do this together and we can learn along the way." So that's how I got into the fund of funds, and it's been a learning experience, and I would not change it. I would do it all over.
Let's, if you could elaborate more on the fund of funds, because that's certainly a more used term these days in syndications with for good reason. But if you could, for the listeners, dive into exactly what it is, how you can benefit from it, and how you could benefit, how the investor can benefit from it, plus how you can acquire more real estate by utilizing fund of funds.
Right. That's a great question. So is a tool or a tool that I suggest new investors into multifamily can utilize, but it's available to any type of investor, any level. So the fund of funds is structured in such a way where you are a fund manager of the fund, and as a fund manager, you are reaching out to other potential investors that want to invest in multifamily, but maybe they don't have the relationship with a high level operator, or they just don't know where to start. But they have a relationship with you, right? Because it's about, investors invest with people they know, like, and trust. So they know you, they trust you, and you're presenting them opportunities. So you grab a pool of investors in your fund, and the fund will then invest as one investor in the parent fund or the operator. And the reason this is a great model for anyone starting out is because you don't have to do the heavy lifting. So the sourcing the deal, the broker outreach, the due diligence, putting it on the contract, and actually close that, all that, and the management of the asset mostly falls on the parent fund, the operator. So your main focus should be uh, raising capital and building relationships with your investors, which, going through syndications, it's a lot of work to do the sourcing, the underwriting, and putting the deal on the contract, due diligence, and on top of that, you're raising capital at the same time. It's a lot for someone starting out to do. So if you want to get your knowledge on the main thing of a syndication is raising capital, uh, a fund of fund structure could be that vehicle that can help you to then maybe your next deal could be a full syndication, because now you're seasoned, you have some experience, and you have a track record along the way.
Yeah. Yeah, that's huge. And there's so many different levels of responsibility too, and it's a team effort. I mean, your operator responsible, of course, for making sure that the deal goes like it should according to the business plan, signing on the debt, whether they're signing personally on the debt or if they bring in a KP who's bringing a balance sheet to sign on the debt. You've got your asset management, you've got your lease up, your property management, you've got your capital raisers who are able to come in and place LP capital from investors. You've got a lot of, and then if you can just go a mile deep and concentrate on your superpower, that's where everyone succeeds because everyone brings a unique set of skills, and then the asset provides for everybody. Um, I love it. And the fund of funds is it's taking the place really of a co-GP structure because the scalability constraints, but there's some platforms that are coming online that are pretty incredible for the fund of funds model and the management behind the scenes of the funds and all of the filings that goes along with it. So I'm excited to see how the industry progresses. Um,
Yeah, it's so true. And you mentioned, what are the benefits for the investor? Um, there's a lot of benefits as far as following SEC guidelines, right? Because you, as a fund manager, you have to disclose to your investors uh, the risk and all the business plan, the returns, everything that goes into the actual deal, you have to disclose. And as a fund manager, you're helping this investor that maybe didn't have prior experience by learning. This is their first step, so they get to see that, right? Um, what I wanted to say, I'm blanking out a little bit here. Um, so you're raising capital the lawful way, right? Because we had to reach out to an SEC attorney. They specialize in SEC law, so you're you're doing all these disclosures, and it's just a mirror of the parent fund, but you're still disclosing all these things to your investors, and it's the good way to actually raise the capital. It's the right way to raise capital if you want to be part of a opportunity, but not part of the GP.
Yeah, and some of these other funds that you can invest in, I mean, they've got like a $10 million minimum to even just be partake in the investment itself. So if you can fund together, create a fund and group that, and then that earns your spot on it, and now you're part of a much larger asset. It's just it's a very cool model. What kind of assets are you all targeting?
So we target assets 70 units and above, um, Class B assets, value add, and our main markets are the Sunbelt states, Arizona, Texas, Florida, the Carolinas, Georgia, and yeah, those are our assets that we're looking for.
Yep, the high growth. It's yeah, where the jobs are flowing and the people are going. That's where that just goes without saying. It's where the biggest opportunities can lie. Um, what are you seeing on the front, the market front? What are your predictions for where things are heading?
I think we're in a unique situation. There were some operators that uh, took a little too much risk, and were not foreseeing the interest rate hike. So uh, there's going to be some headwinds in for those operators that took floating rates, bridge loans, and there's a lot of them out there. And you've probably seen them in the news already. Our view is that if the asset is cash flowing on day one, and you're writing conservatively, and you have the potential of assumable fixed rate, um, those are going to be the best deals to go after in the current market, because you are taking away the interest risk right out of the bat, you know. And we're seeing currently that we're increasing rents and increasing the NOI without putting a lot of the capex capital to work, and that's another benefit that you can have for our investors, is if you're able to do that. Uh, but it's gonna be interesting to see what happens in the next 12 months or so, and next year, with those floating rates coming due.
Yeah, there's a wall of commercial real estate loans that are absolutely coming due, and really it starts to spike even more in 2027 and 2028. It's uh, predominantly offices, so we'll see how the market fares to win. It's just things change, just like over time. You just got to adapt. The work at home model. I don't see that changing anytime soon. It's something that you just got to adapt, make changes, and pivot and make sense of where everything's at. There's a lot of operators that have definitely that have headwinds that are, I'm sure, changing their model and seeing what they could do. There's definitely capital calls as well. What are y'all looking for in sponsors and operators, for that matter?
Yeah, so as fund managers, we look for operators that have multiple uh, exit cycles on the business plan, and they view their asset as conservative as possible when they do their underwriting. Um, we also look at uh, operators that have the mindset of the tenants are an very important key component of your business plan, and make sure that their actions are in line with what the tenants are looking for, what is that is going to help them to stay there longer at the in the asset. And little things will add up in the tenant's view. So uh, that's what we're looking for in an operator, and someone that's transparent and communicate as well, because that's very important. You want to communicate uh, good news fast and bad news even faster, right? And if you have an operator that have that type of mindset and leading with that, that's a high level operator that I want to partner up with.
Yeah, I think it comes down to common sense communication and ultimately a sense of urgency. A lot of people lack lack both, and that can become frustrating, and then ultimately can create rifts amongst either partners or investors. And then what was not an issue became an issue because of lack of. Um, totally agree, and it's there's nothing better than a rapid response on anything.
Yes.
For sure. And then as far as tenancy goes, I mean, when we've taken over properties, I think the biggest thing that we've seen is just utter neglect from the property aspect, whether it's grass being maintained and mowed, landscaping either present or not present, but not being maintained, screens on the exterior, just curb appeal in general, lack
Mhm.
of, which then ultimately comes down to the lack of management, not being able to answer the phones calls or responding to inquiries, maintenance requests, and that's truly those are the hidden opportunities where you can just plug in a greater degree of management as well as asset management, and it's already a win. Ultimately, you're just taking over someone who just fails at the industry that they're in, um, and those deals are still out there. What how many total units do you all have under management currently?
Oh, right now it's 432
400.
units. Yeah.
That's good. That's good. And then you all are, do your operators, are they third party property management? Or are they vertically integrated?
Yeah, we do both. We have a third party manager, we have on site payroll, and then we have an operations manager that takes care of all of that communication, right, to make sure that we're executing on the business plan.
Got it. Very cool. What's one of the biggest lessons you've learned so far?
It's mindset, Josh. We put ourselves in this little box, and then we look in each direction and we say, well, I can't go here, I can't do that. And we need to start thinking about, yes, you're not there yet, but if you invest in yourself and like finding the knowledge, you can make this happen. Like if you had asked me 2 years ago, I'll be here talking to you, I'll probably say no, there's no way. But uh, I had to push myself, be patient with yourself, and surround yourself with people that are ahead of you and have the knowledge that can share that information with you, and take a bet on yourself, right? You have to bet on yourself that even if you don't know it all, there's someone out there that has that key that can open that door for you, and you go and ask that individual, that operator, or that investor, how did you get from this level to the next level? And I think it happens over time, changing that mindset that are challenging, things are difficult, you don't know it all, but you can find a person that knows it and that can guide you through the process. And that's what I would suggest, just partner
Yeah,
with people that help you grow
yeah, I
professionally.
heard
Because
some very key things there. So mentorship, get guidance, get your guidance, get learn knowledge. Competence is confidence. So make sure that you educate yourself, get the knowledge in your head, then you ultimately become more confident to have those conversations. Get in the room, get around other people that are taking action and doing what you want to do, and ultimately, I think take action for sure is just ultimately do it. Um, we're all more confident with somebody in the room who has been there and done it, because ultimately that's your guiding light, and you can learn a lot from somebody who's got experience on what you're wanting to do for sure. You don't have to go it alone. Ultimately, you don't have to go it alone. There's so many people that have been there and done it, that have proved the path for us. It's just getting out there and doing it. What kind of books do you like to read?
I like personal development books. Um, the one that I, the most recent one I read that I really enjoyed and has really helped me to create new habits is the Power of Habit by, I think it's Steve Doogie. Maybe I'm forgetting his name, but that is a great book to read. It's helped me to build my good habits, build the routine, and just following through and making those things to grow personally. Also reading this other book by Jen Gottlieb, Be Seen, which is helping me to understand how to build my brand. That's more like a personal book to read, and those are really good.
It's definitely important to get the word out on what you're doing, especially in real estate. Ultimately, it's like, man, I can't believe they're posting about real estate again, and all. But you've got to let people know what you're doing, because ultimately, you're helping people out, and then if somebody has a deal or has something for you to look at, they know that you're in real estate. So it's a synonymous relationship, and social media should ultimately be used as a tool. So if you're using it to pump out what your brand is, what your business is doing, then you're reaching an audience and you're reaching people that ultimately people do business with people. So I like that. So I'm gonna look at that book, Be Sane, because it's important. You're building, you are the business for sure. Um, what is so what's one of the nuggets that you can give to the audience for someone that's starting out in real estate and not really sure which direction to take?
I would say, invest in yourself. And I think we talked about this. Your income will never outperform your personal development. So invest in yourself. I can say the reason I'm here at this point and all the opportunities has been because attending these rooms has been very valuable. Making those partnerships and fostering those partnerships that investors and people you meet at these events is so valuable. So say invest in yourself, probably number one, and be patient with yourself. Just know that the version of you is a work in progress, and it's up to you to take that action now, so then you can be that version in the future. And so be patient with yourself, and that also like betting on yourself. Bet on the skill sets that you have and the things you can bring to a team or a partnership. Just find what those things are. What are strengths and how transfer into a partnership, right? And the last thing I would say, probably just take action every day. Try to be 1% better than the day before. So as you learn, put them to practice. One thing that I posted about this yesterday, I learned about the 18-minute habit, where if you're trying to master something, spend 18 minutes a day just doing that one thing. So if you want to learn about real estate, spend 18 minutes reading a book, 18 minutes, doing a YouTube channel, learning about it, or just calling another investor and finding out. Spend 18 minutes just doing this, and over time you'll become an expert at whatever it is that is a challenge for you. So that would be the tips I would give to anyone trying to start out there.
Very cool. Very good information. Al, I definitely appreciate you coming on the show today. Definitely look forward to following. If somebody wants to get a hold of you and learn more about your company, how can they reach out?
They can reach out to sonawealth.com, and they can also reach me on Instagram at Al_Domínguez_. Those are probably the best ways to find me.
Awesome. Very cool. Al, we appreciate your time. Look forward to following you, and we will certainly talk soon.
Thank you, Josh. Thanks for having me. It was awesome meeting you, and thank you.
Yes, sir. Thanks again. Bye.